Thank you, Srikanth sir, Shika, and so mute. Yeah. Thank you, Srikanth sir, Shika, and Mr. Abhishek. Thank you very much for giving me this opportunity to share with my brief profile and brief presentation on SME listing in NSE. And it is my privilege to present you a few information slides to you. This is actually the initiative of the government of India to project all MSMEs and SMEs to go for listed platforms in Indian markets. So what is actually MSME? MSME is defined as micro, small and medium enterprises. As you are aware that in India, almost 6 crores of SMEs are registered in Udyog platform, and they are contributing about 49% in exports and 30% in gross domestic product. So after agriculture sector, SME sector is more growth oriented and creating more wealth to the people and country. So in this sector, the government is more focusing on developing SME sector even after this COVID-19 effect, because a lot of SMEs are affected by the COVID-19. So as you are aware, out of the 6 crore SMEs registered in Udyog platform, hardly 600 SMEs are listed in stock exchanges. Out of those 600 SMEs, they have raised a capital of 7,096 crores over a period of 5 to 6 years. Whereas the market capitalization of this SMEs as on date is about 70,000 crores. So for all the SMEs, the main problem is funds. Funds are very ingredient for any business to run the show, but all the SMEs almost they are facing a lot of problems due to lack of funding, structured funding, all these fundings, because limited resources are available for SME sectors. So how to cope up these problems, how to raise the funds is the main problem for SME sector. Generally, there are only two types of funds, as you know, equity funding and debt funding. So how to go about it? Basically, today we are more interested in going for equity funding and listing the shares on SME platform. So what are the various types of funds available for the entrepreneurs? In case of equity funding means you can get funds through IPO, private equity, strategic investors, venture capital, fund of funds. What is IPO? IPO is the initial public offering where you can raise funds through public and get your shares listed. So earlier days, the listing happens only to big companies like Tata, Birlas, Reliance, like medium scale companies. But the SME sector never had the privilege of attracting public fund through IPOs because of the stringent conditions existing those period in exchanges and the government. Lately, the government of India has focused on developing SME sector, and they have created stock exchanges exclusively for SME sector. One is NSE Emerge and the other is BSE SME platform. Through these two platforms, people are, public also participating in SME sector, and they are contributing to the growth of the economy as well as the development of the SMEs. So let us start going one by one. What is the funding pattern available in equity funding and debt funding? Out of all the funds, what I have explained, the unique fund recently the government of India during the COVID time announced is the Fund of Funds, FOF. Fund of Funds is the unique fund available only to SME sector. In this, what is the intention of the government is, the government has created the initial corpus fund of 10,000 crores setup with 10,000 crores. This fund is called Mother Fund. Out of this fund, what they do is they will provide another children funds, means different investment platforms, investment companies or mutual fund agencies like that, wherein another 40,000 crores they will pump in. Once they pump in for their contribution, then what they do is they will go for NSEs, SMEs, and then they will scrutinize their account balance sheets, business models and everything, and they will invest in those SMEs by way of contribution in equity. This is a very good step initiated by the government of India, wherein the government is also participating in the growth and development of SME in equity, because of this, the SME also gets more comfort, more valuation, more visibility and everything. So this is a very good step taken, initiated by the government of India to encourage the SMEs. So the fund of funds and equity contribution is the biggest, this thing happened during COVID period. So why people prefer equity funding? Why should they go for equity funding only is a criteria now. So for example, if we are going for raising a debt fund of say 10 crores or anything towards working capital, term loan or whatever it may be from the banks or any financial institutions, the present rate of interest is around 10 to 15%. So what happens is every year you are going to shell down 1.5 crores only on interest basis, and that too periodically you have to shell down your cash to the financial institutions. Whereas if you borrow term loan, then you need to pay even principal amount also on quarterly basis to the banks. So what's happening is whatever your profit or whatever cash flow is generating by the SMEs is going only towards making payment towards interest or principal to the banks, and they are suffering cash flows. All the SMEs are suffering cash flows because of the interest burden or cash flow problems or logistics and all those things. So what happens is when you go for equity funding or raise the capital through equity, you can save all the amount of these example, this rupees 1.5 crore or whatever amount you have borrowed. You will be saving and you are flowing back that amount into your business itself. So once you generate cash flows into your business, what will happen is you can directly go for developing your business more vigorously and go for an expansion, or put your R&D efforts, or you acquire talent, or go for even geographical expansions. So equity funding is creating a lot of benefit to the SME entrepreneurs. The entrepreneurs will be in a position to create cash flows abundantly and as per requirements. So always it is advisable to the entrepreneurs to look into raising equity capital rather than going for debt funding. So again, debt funding. Why not debt funding? Debt funding is why not means there are a lot of challenges to get money from the bank. Generally, banks are asking collateral securities to the tune of 100 to 100% to sanction the loan. And as we already discussed, interest payments are 10 to 15% per annum. And if you don't pay the interest on time, then you become NPA, or your credit score will go down. And accordingly, if you banks are also, they are not ready to disburse loans timely. So whenever you need money, you may not get it. There is a lot of queries, a lot of problems, a lot of these things are there for SME sector, because they are growing companies and they may not be in a position to satisfy the criteria laid down by the banks 100% accurately. So these are the things wherein the debt funding is more risky for a growing businesses, startup businesses and all those things. So because of that reason, equity funding is a better way of raising capital from the market. Now we will go and discuss what are the benefits of listing on stock exchanges. Then we will be knowing how we can get the benefits out of listing our shares on stock exchanges. So the first advantage is unlock value of the enterprise. What is unlocking the value? Means you may be having your business over a period of 5 years, 10 years, 15 years, or whatever it may be, and you might have developed your business in such a way from scratch to the top level. So your valuation of the business will be tremendous, and it is not visible to anybody. Your business may be more than 10 crores or 100 crores, but that is not visible to anybody. Your valuation is not displayed anywhere. For example, if you go for listing, recently one company went for listing on an SME listing and they have gone for a 10 plus 80 rupees premium. Means they have issued shares at 10 plus 80 means 90 rupees value for per share they have issued to the public. So in this case, what's happening is you are unlocking your value of the enterprise. Your value has come to the market with 10 plus 80, 90 rupees. Like that, your value of the enterprise will go up once your shares are listed. Then wealth creation and value addition. What is the wealth creation? Suppose you are running the business over a period of 5 years, 6 years like that. And if you are generating revenues every month, every year on year, and your profits are going up, your EPS is going up, your book value is going up. So what will happen is over a period of time, your wealth is created automatically in the books. Your value is added in the books, and it attracts a lot of investors, or it attracts a lot of PE funds, or anybody interested to go for acquisition of the company. The value will be disclosed or displayed. So it creates a value to your company automatically when you list your shares on the exchanges. Then credibility, visibility, branding. What does it mean? Credibility means, suppose if your shares are listed on stock exchange, automatically you get a credit because everybody will think, oh, your company is listed. Great, like that. So otherwise people may not be knowing it. This is once it is listed, it is all over India basis, people will be knowing that your shares are listed and you are having some standing in the market. That is a visibility, and brand also created to you. These are the advantages. Now coming to other benefits, taxation benefits for the investors and the company. What are the taxation benefits available for the investors? Capital gains mainly. What are the capital gains? Once your shares are listed on the stock exchange, and if you sell the shares after you get some profit or whatever it may be, and if it is within 1 year period, the taxation is only 15%. That is short-term capital gain tax. The second one is long-term capital gains. Suppose if you hold the shares for a period of 1 year or more, and then if you sell your shares after that period, then your long-term capital gains tax is only 10% on your profit, subject to minimum 1 lakh exemption. So these are the benefits available to the investors, wherein if they invest in the companies listed, then they will be getting the benefit of income tax benefits. Coming to employees, Esops and talent retention. What are the Esops and talent? Employees stock option schemes. If your shares are listed on the exchanges, what will happen is you are eligible to give options to your employees. So these employees, they will hold employees hold the shares of the company through Esops at lesser price, and they will have a loyalty to the company because they are also part of the business growth and development. So you can retain the talent, because otherwise what's happening is a lot of employees, they are moving from one company to the other, and a lot of attritions are there in the market and the companies. So once you issue the shares, they are locked into for a certain period with you, and they also can grow along with the company, and it is a benefit to the sector company. So this is the one way of retaining the talented employees in our organization. Employees are assets to the company, and so this attracts the employees to stay with the company. Coming to the next one, vendors and suppliers hold shares and will have bonding. In certain SME segment companies, what's happening is all the customers, suppliers and vendors, the promoters and companies giving shares to them, and they will be holding the shares, and they are having a bond with the company itself, and they will not leave the company. They will not go to any other competitor or anybody, since they have a bonding that they are also shareholders to the company, and they are also owners to the company to some extent. So that is also another benefit, wherein the vendors and suppliers will continue with the company as long as they grow. as long as the company grows, they will also grow and they will also get benefited out of that. And the other one is cost-effective way of raising funds. This is very, very ideal, because now what happens, suppose if you are raising a capital of say 20 crores or 50 crores, whatever it may be, it's a one-time expenditure only. If you raise a 50 crores, suppose if you are spending some X amount, that X amount will be extended over a period of time, because these funds, whatever you are raising through equity markets, that will be with the company only. You need not repay them, or you need not divert them or anything like that. So what happens, suppose if your capital is with you for a period of 10 years, 15 years, the cost is very, very minute compared to other debt funds. So it is very economical to raise funds through equity markets. Another advantage, shares are currency. Shares are currency means it's just like a cash. Suppose if you want to have some money, or if you want to have some fund, then immediately you can sell it in the trading platform of the exchange and you get your money within no time. So they are just like a currency. Or if you don't want to sell, you can pledge them and you can take a loan also. So that is also another advantage. So in addition to this, in case of a listed company, what you can do is, suppose if you find a business which is attractive and you want to acquire that business, what you can do is you can swap the shares. Swapping means instead of paying cash to the company to acquire, you will pay your company shares. So what happens? Your liquidity is safe. You are not going to your cash out. There won't be any cash outflows. So by swapping your shares, the other party also forms part of your business model, and both can grow together. So these are all major benefits for listing of the shares on stock exchanges in the perspective of this thing. Next, to go to IPO, these are the preliminary steps, what you have to do and how you can go. Basically, first step is, first the management should have an idea or should have inclination to go for IPO. Then they have to form a team. Team will be IPO advisor, CEO, CFO, company secretary, legal team. All these teams will sit together and they have to plan for an IPO. Then what is the roadmap to SME IPO? In simple steps, your unlisted company in first stage, as we discussed earlier, first preparation should be there. Once all the documents are prepared and due diligence is over, then you have to file the documents to the authorities. Third step is, once you get the approvals, then you have to do the marketing and other things for listing, raising funds. Last stage is listing and value creation. So listing and value creation we will discuss in the next slide. In briefly, preparation means what? Preparation means first you have to prepare a feasibility report. Feasibility report means what is the fund you require, how much fund you want, and what is the purpose of the fund, where do you want to invest that fund. That is to be clearly mentioned in the offer documents. So you have to prepare a feasibility report. Then you have to approach a category 1 merchant bankers, who are also called lead managers. So once you appoint the lead managers, they will scrutiny everything. And because ultimately it is the responsibility of the lead manager to take the issue to the public and to get it subscribed. So the role of the lead manager is very critical and very, very important. So you have to select a lead manager who is reputed and who is capable of handling the issue. So once you select the lead manager, then the next course will start. With the consent of the lead managers, you can appoint the registrars and other members like advocates, like brokers, bankers. All these people you have to be appointed. Once merchant banker also gives their consent for these people. Then what will happen with all these information available and with all the financial statements available, draft offer documents will be prepared, and the offer documents will be prepared and vetted by the merchant banker, and then he will submit it to the stock exchange. So the stock exchange, what they will do, they will go through each and everything. They will, if necessary, they will visit the plant. They will also ask the board of directors also to come for an interview. They will go through all these things. After all these things over, if anything is there, then they will ask for any queries are there. Then they will send queries to the company. Queries are to be attended. Then if everything is over, they will give their consent for the issue. Once they give their consent, draft red herring prospectus, then what we will do is you prepare the prospectus, approve it by the board of directors, and then file it to the register of companies. Once that is over, then you can launch the IPO, and that will be there for 4 days, and you can close the IPO once it is subscribed. After subscription is there over, then again you have to allot the shares and submit to the stock exchanges for their approvals. The stock exchange, after seeing each and everything, and then they will give their consent and approval for listing, and also subsequently they will give permission for trading on stock exchange. This is the in brief steps involved for taking your company to IPO and then getting your shares traded on stock exchanges. So what is the timeline? Strictly speaking, if you are ready with everything with the professional team and other members, you can complete your issue within a period of 90 days, and you can raise even from 10 crores to 100 crores within no period. Means within a period of 90 days, you can plan raising any amount between 10 to 100 crores or lesser than that, whatever it may be requiring as per your requirements. How it goes 90 days. First, board of directors, they will approve the IPO issue on day 1. On day 10, AGM or EGM with shorter notice will be called and approval will be taken. Then 5 days time, we will appoint the intermediaries like merchant bankers, registrars, brokers, and all those things. Then auditors will prepare the financial statements, and the auditors will give their report, and the company will prepare the financial statements, and auditors will give their report. Then completion of due diligence and draft red herring prospectus will be prepared, and that will be submitted to the stock exchanges. The stock exchange will verify the draft prospectus, and on 70th day, they will give the in principle approval. Then the company will file with the ROC the prospectus, and they will take the acknowledgement. And next day, the company will announce the date of opening and the date of closing. On 80th day, issue opens, and on 83rd, issue closes. Within 7 days time, that listing and the trading of the shares will start. So this is the timeline where if efficiently people will work and efficiently information is provided, then you can raise a capital of any amount as per the criteria provided by the stock, SEBI for the SME listing. So the promoter should have inclination to go for IPO and listing their shares. For example, in brief, in IPO market is booming like anything for the last 2 years, despite the COVID scenario. You must be seeing how companies' shares are getting oversubscribed 50 times, 100 times, 150 times, 200 times like that. So it is a very good period, and if any good businesses are there, immediately they can tap the capital markets and get themselves benefited, and then they can also participate in the growth of Indian economy and all those things. This is an example. Last year, total 63 companies went to IPO and raised 1.2 lakh crores from the market. This is main exchanges, means main board of the exchanges. Whereas in SME segment, 59 companies have raised about 746 crores. Of course, this is comparatively more than 27 issues that were happened in 2020. So what's happening is year on year, SME sector entrepreneurs are also looking for equity fundraising, and they are also growing. So once the shares are listed, then what happens? Your company valuation also grows. In one company, what happened? They went to BEW Engineering. Recently, in September 2021, they went for an issue in SME segment with a premium of 48 rupees. Means 10 rupees face value plus 48 rupees premium. Total 58 rupees. They offered to the public, and the issue was subscribed in September 2021. The share price today, it was around 690 rupees. In other words, there is an appreciation of more than 1000% in 3 months. So abnormal capital appreciation will be there for companies which are growth oriented, which are fundamentally strong, which have very good business plans, and which have inclination to develop themselves and contribute to the growth of the country. That is the biggest advantage for listing shares on equity stock, SME stock exchanges. So friends, thank you very much for listening a brief on this SME listing. And as a part of compliances, I have to give my disclaimer stating that the information given on these slides are general and meant for knowledge basis only for the participants of this session, and should not be construed as an advice or recommendation given by me. Professional advice must be taken before considering this information provided in this presentation. The presentation, for any mistakes in preparation of the, since all reasonable care has been taken, I am not responsible for any mistakes in preparation of the documents. So this is all about listing shares on exchanges, especially on SME platform. Thank you, Shekha and Abhishek. I hand over the mic to Shekha for the next session.
Thank you, sir. Thank you so much. This was a very explanatory session with detailed presentation. So now I request Mr. Abhishek Gaur to kindly take over. Thank you.
Thank you, Shikhaji. Thank you, Mr. Ravi Kumar sir, for giving us this opportunity to present regarding the SME listing process to the participants today. A warm welcome to all of you. Hope you all are keeping on well in this tough times, and may you all good health going ahead also. Just a minute. Just excuse me for a minute. I'm sorry for that. So before I start sharing my screen, I would like to actually acknowledge what Mr. Ravi Kumar sir has done or has said. In fact, he has made my life much easier because he's covered most of the topics which was actually materially important for all the participants in terms of being an entrepreneur to understand why it is important and how they can go ahead on the SME IPO. I would be basically in the presentation touching to a lot extent on how the regulations work, how you'll have to fit yourself or try to see how you're eligible or not. And subsequently trying to cover a few points which I think that would be a topping to what Mr. Ravi Kumar sir has already exhaustively covered. So just allow me to share my presentation. And Shikhaji, can you please confirm me whether my presentation is visible in full slide mode?
Yeah, it is visible.
So NSE's SME platform was, yes, formulated as per the Government of India's initiative of forming a task force for providing the small and medium enterprises an alternate mechanism for raising funds. This was basically to look at an opportunity, and this actually came up on mind of the Government of India at the time of subprime crisis in 2008-2009, when everybody across the world was bleeding, banks were not able to fund because of financial crunch, and also then the government thought that if they formulate a new mechanism of financing the SMEs, because SMEs, yes, they are the backbone of the economy. They help the country to grow to a large extent. They contribute a lot in terms of GDP as well as in terms of exports. So all the contributions of the SME or MSME sector is definitely acknowledged by the central government. And they also wanted alternates where they should not be a roadblock for them to keep their growth going. So there was a task force which was formulated, and then the task force did its study and came up with a report. And then report was in that report, SEBI was advised to formulate a mechanism wherein, because it is already a capital markets prerogative, SEBI can work on it and get on some regulations. So this is how the regulations on SME listing came across in the year 2012. So in September 2012, SEBI came up with these guidelines, and we happened to see first few companies getting listed in 2012 itself. This is, yes, again, a segment which is regulated by an efficient regulator across the globe. If you look at NSE, India's capital markets are one of the highest regulated market. And yes, we see that there's a lot of growth potential where people and entities are growing to a lot of extent too. As per SEBI, this is a separate segment within the main exchange. So there's a smaller platform which is provided where small and medium companies can access to this capital. And understanding what is the criteria of a SME is what we'll be knowing in the subsequent slides. And when the company gets listed, it is basically available on the same trading screen where the main board listed entities like your big Reliances and any other entities across the country are getting listed. These are the intermediaries who facilitate this kind of a segment are similar. That is, the merchant bankers and the trading members are same for both the main boards as well as the SME platform. So there is a proper match between the main board and the SME platform. The only thing is, this is a segment where now small and medium companies can also access and can also dream to get onto the main board or get onto a listed platform, which was not easily possible prior to 2012. Yes, it's around 9 years now, and we have across India have got a good amount of success. But yes, there's a lot of water to be tested. There has been a lot of ups and downs in the economy, subsequently in the capital markets in the few past years, which has also had its own play in allowing the SMEs to access the capital markets platform. So as I was talking about the numbers, if we speak today in NSE, we are having around 236 companies which are already listed. And subsequently, as we talk today, we are already having a company from Visakhapatnam, which is already opened up its IPO, and it seems to be fully subscribed. In terms of the value of the companies or the market capitalization, if we look at of all the 236 companies which are listed, it is more than 30,000 plus crores. So it's more than 30,000 crores. So you can understand what is the kind of value these SMEs has created over the period of time. Total amount of funds which these companies have raised is to the tune of around 3,600 plus crores. On an average, if we take it, it's around more than 15 crores. So if you look at as an SME, probably you might understand any amount of more than 10 or 15 crores would actually help you to deploy it into your business activity and subsequently scale up your business and compete globally. So that is what has happened over here. You're able to see that companies who have raised funds have deployed it into their business and they are subsequently growing. The growth is also visible by one more mean, that is the last point which I'm going to talk about, is migrated to the main board. So this is a platform where companies, when they grow in their business, when they become matured enough to understand the regulatory framework and subsequently their profitability and their business grows, when they want themselves to migrate to the main board, they can directly seamlessly migrate to the main board through the SME platform. So in that sense, also out of the 236 companies, 91 companies have also migrated. It's more than 91. In fact, the numbers are a bit older of last month or so. So there are more than 91 companies which are there. Anyways, more details about migration to the main board is a specific point in a slide which I'll be covering subsequently. But this is how you can look at companies are growing, they are migrating to the main board, they are getting onto the main platform. And in terms of sectors, it is not only a specific sector which is being looked at, it's a diversified world where companies from IT to entertainment, agriculture to manufacturing, services, everything which is there as a business in India, they are accessing this platform and growing. Now, trying to understand when a company can access this platform, probably what would be the situation where the company can think that, yes, I want to get listed, and how they can get onto the platform. So if we talk on those points, when we start looking at businesses, they are basically in a very nascent stage when they start up, which are basically funded by the promoter and probably family and friends. When the company starts crawling and wants to stand on their own legs, then you have the early stage funding, which is mostly the debt funding, which is accessible. Entrepreneurs take debt for the first time very hesitantly, and subsequently, if somebody is diligent enough, they repay that loan, and then subsequently it becomes a process. So you find that there are multiple avenues of debt fundraising, which has been a major source of financing for most of the small and medium companies. Subsequently, we have seed capital, engine funding. So, but these all type of financing, apart from debt, is basically a specialized activity. Some people have a flair of a particular segment, then they fund in terms of equity. But when you look at the companies, when they are into growth stage, when they are into the takeoff stage of their business, when they know that, yes, they have, when they have realized their metal into the segment which they are, and now if push is required, then they can jump onto the main platform or become very big. So that is the stage where generally people look for funds, and if costly funding is available, then it again hampers their growth or probably gets them back to a few notches. So at that point of time, before 2012, or probably here also in today's world, we have another mechanism of equity funding, which is private equity. But again, as we talked about, private equity is again a sector specific or probably a flair of a few bigger investors who understand some businesses. You might not understand all businesses, but being a democratized platform as a stock exchange, it is available to all type of participants. As I told you, we are catering to around 20 sectors where you might not find the interest of all the private equity players entering into the segment. So we have rationalized this platform. We are able to cater to the requirements of the SME sector at the growing phase. And when the company gets those funds deployed into their business activity, then there's obviously a higher probability of them growing and making themselves available in the bigger platform. This is how the SME platform is poised or probably is placed by the regulators to make financing available to the participants and to the businesses basically, and keep growing. Then the company grows in their business activity and becomes a large cap company, or probably migrates to the main board, all those things. So this is how we need to understand where things come and how the entrepreneur can access this platform. There are a few eligibility requirements where you can understand, okay, all these stages are crossed or not. And subsequently, in the recent past, we have also come up with a few regulations pertaining to the startup ecosystem, which would also be covered during the presentation, which would be there for your ready reference, and you may try to take note of those things. And if you have any queries, we'll be happy to answer to post our presentation. So who can get listed? So trying to understand the eligibility requirements. We have two mechanisms, emerge and emerge with a tech startup mechanism. So the emerge one is basically the segment where currently most of the 20 sectors companies are available. It is basically into manufacturing, services, energy. Energy, you have renewable energy is also one of those parts where people are getting listed and they have a decent amount of stake. But in terms of sectors, if we look at, you can read out through the paragraph over here: auto ancillaries, agri-tech, entertainment, healthcare, IT, media and entertainment, human resources, FMCG, textile, transport, renewable energy, all these things. So if you look at, there is hardly any segment which is currently left out, which is not accessible by the small and medium enterprises on the listing side. But now if we look at what type of tech startups are there, what type of entities can access this platform, it is basically those entities which are into IT domain, data analytics, biotechnology, nanotechnology, e-commerce, genetic engineering, space technology, 3D printing, artificial intelligence, and robotics. So these type of entities which we are currently not eligible on the main emerge platform, now they have been a window where they can come up and try to test their metal and try to see that whether they are able to access this platform or not. The basic difference between these two is the tech startups and all are basically not profit-making entities. Some of them make losses for some time, and then the revenue starts at a later stage. That's profitability starts at the later stage. So in order to accommodate that, a few more regulations have been relaxed compared to the emerge platform. Again, we'll be discussing how it has been and what are those points which are relaxed. So in terms of emerge, we are having regulations which are laid down by SEBI, which says that any entity whose paid up capital is less than 25 crores. Here, paid up capital is basically the face value of the share, that is a 10 rupee share. So in that terms, if the paid up capital is less than 25 crores, the company is an SME eligible company. This is what SEBI has laid down. But subsequent to that, what we as an exchanges, we also had a written down framework. So we understand those framework. It would be again having a step-by-step process. So to understand that, any company who is having a paid up capital of more than 10 crores and less than 25 crores, the world is available for the SME or the main board platform, depending upon the valuation profitability subsequently. So if the company is able to fulfill the other requirements, then they may consider themselves for main board also, else they can come onto the SME platform, stay on the SME platform and migrate to the main board. This is how they can look at. Any company whose paid up capital is less than 10 crores, they have to definitely come on the SME platform only, and then subsequently get into the business and do their business activity. Along with this, what NSE as an exchange looks as it, there should be a 3 years operational history where there should be financial track record also established of the 3 years. Among these 3 years, company should be profitable for at least 2 years, and the net worth of the company should be positive. Along with that, probably hygiene factors of a promoter not being referred to BIFR, all these things would definitely be there. But yes, these are very simple and very agile kind of requirements which most of the entities, when they are there into business, they might be able to fulfill. Now, looking at tech startups or probably technology-oriented companies, what should their eligibility requirements? This would be the paid up capital, again, less than 10 crores or less than 25 crores, 3 years operational history, which is again similarly required. The annual revenue should not be more or less than 10 crores. This is what a requirement is. So any company whose revenue is more than 10 crores, even if it is making losses, then that company can go ahead, but they have to have a positive net worth, and the previous year's business, there should be a growth in their business and revenue over the previous year. So 20% growth in their business, if that is there, even if the company is making loss, the company can access the emerged tech platform and get listed. Along with that, there are a few shareholding conditions also which the company has to fulfill, which says that at least 10% of the capital, which is prior to the public issue, should be held by a qualified institutional bidder or a buyer, or any of the investor from the angel network should have a investment of 10% before the company is coming up with an IPO. So these are a few relaxations accessible to the tech startups, mainly in terms of relaxation is given in terms of the profitability, where on the normal merged platform, we require at least 2 years profitability. Whereas if it's companies are tech driven with the type of sectors which we have discussed in previous slide, if they are among those, then they can access this without the profitability requirement also, but they'll have to fulfill the other requirement, which is basically 20% of the business growth, which could be a user or revenue growth or a customer base, and the pre-issued pre-IPO 10% should be there with either an angel investor, private equity firm, or a QIB. So these are a few eligibility requirements where companies can fulfill these and then make themselves eligible to be listed on the NSE's SME platform. Now, moving on to the regulatory framework, along with the 25 crores capital what SEBI has laid down, it says that an IPO on the SME platform can get completed with minimum 50 applications. So there, whereas compared to the main board, it requires at least 1,000 applications. Dilution is similar to a main board where 25% dilution would be there. That means that the promoter's shareholding would be 75% and below post the public issue. So it can come down also, but the minimum dilution should be 25%. DRHP, that is a draft red herring prospectus, is prepared at the same format as it is done in main board platform. Why? Because it to comply all the regulations of the land, and subsequently when it is filed and when investors look at it, they'll basically be having a fair amount of idea how the company has been managed and builds a bit of with the investors groups. Another benefit over here is it is filed only to the exchanges and the exchange gives its observations. It is not filed to the SEBI. So yes, after we are comfortable, we are able to vet that particular company properly, the documentation is again shared with SEBI, but the observation doesn't come from SEBI. It's only at the observations get restricted. No required, so that is basically reducing the cost of IPO for the enterprise. It's an 100% underwritten IPO. The market making is provided, facilities provided for 3 years. That means that if there is any situation where somebody or an investor want to buy into the security, or probably somebody wants to sell the shares because of their own financial requirements, there is a buyer or a seller available on the stock market at any given point of time, which means that 75% of the day, there would be a market maker who will be providing quotations of this stock. People can buy and sell on the stock exchange when it is getting listed. Post-listing compliances, yes, this is one of those kind of regulations which is largely talked about, and most of the enterprises basically feel that it is a kind of a tough thing. But if we look at on the main board, companies required to give their financial results quarterly, whereas for an SME enterprise, when they are getting listed on SME, they are required to give unaudited half-yearly unaudited results, which is only 6 months time, and then 1 year would be an annual accounts. So that is how the post-listing compliance is also relaxed to some extent. But yes, there is no relaxation in terms of corporate governance, because that is basically a discipline which is to be required for the entity and the promoters to be maintained when a listed environment when they are in the listed environment. So corporate governance norm are same as per the main board. Migration to the main board. So this is one of the beautiful option which SEBI has given for small and medium enterprises, where they say that staying on the SME platform for 2 years, the company can migrate to the main board. Now, to qualify for that, it's not only 2 years. What we as an exchange have put in forward is companies should complete 2 years of existence on the SME platform. Along with that, after completion of the 2 years, then there would be a approval from the shareholders, which is to be taken for migrating to the main board. Subsequently, in terms of financial stability and financial position of the company, the paid up capital of the company should be more than 10 crores. And last 6 months, the total market capitalization of the company should be more than 25 crores. So these are three basic requirements which are to be fulfilled by a company if it is crossing 2 years and willing to migrate to the main board. Now, even is fulfilling those requirements, it is up to the company whether they want to migrate to the main board or still want to stay on the SME platform for quite some more time. So that is how the entire framework is designed. It is a lot of liberty, a lot of power given to the enterprise also to decide and see how they can build their businesses and pick and choose from which platform they want to be on the listed platform of the exchanges. Now, in terms of what type of investors can access these platforms, it would be a minimum application size of 1 lakh. It is not a 15,000, which is but it is not. You have to do a minimum of 1 lakh rupees and multiples of 1 lakh. Trading lot is also similar. It is 1 lakh and more. The nominated QIBs and private equity funds who might be interested in the company, they can also come as investors on the SME platform when the company gets when the company is looking for getting listed on the SME platform. So these are few regulations, and there is a lot of relaxation given to the enterprises in terms of regulatory requirements and compliances. Along with this, exchange would also help the SMEs and their team to get accustomed to the regulatory requirement, and there would be a normal kind of training or a counseling for submission and filings also. That would be over and above which is already there on the public domain. Now, if you understand the steps, mostly sir has already covered, but I'll just read through. First, it would be interaction with the exchange teams or probably the intermediaries and appointment of intermediaries, that is advisors you can talk to, or probably SME team you can talk to on the exchange. Appointment of the intermediaries, preparation of the offer document, filing document to the exchange. NSE would do its where there would be a site visit to the company and trying to understand whether the business is really there and how the business is being maintained. After our due diligence is done, we give an in principle approval to the company, and from there the company is open and allowed to open the public issue any point of time for 1 year as a tenure. So after the IPO is open, the company gets listed and it would ring that bell on the stock exchange and get listed. So these were a few regulations which I wanted to talk to, and a few more value propositions where mostly sir has already covered. I would touch upon points which would be basically in terms of corporate governance. Yes, it increases a lot of visibility and credibility. Why? Because the company is first there on the regulated platform. Second, if the company is choosing NSE to be there as a listed platform, then it would definitely add more to their credibility, because most of the bigger investors, the institutional investors across the globe, they definitely look at the companies getting listed on NSE when they want to invest in the company for further round of funding. So if you look at when you're directly getting listed on a bigger platform, on a platform which is mostly looked at by bigger investors, then you get a lot of credibility. Subsequently, the corporate governance norms are to be followed, which are there as per SEBI. And when these things are done, it creates a lot of thirst among the investors that if the company is managed properly, their investments are safe, and then they can subsequently keep on adding to their investments and keep the funding requirement company going. Migration to the main board, which I already covered. Borrowing terms, better borrowing terms would be accessible to the participants, to the companies, because first of all, the moment you get listed, your benchmark prices when you go for financing change as an unlisted entity or a listed entity. That is again one thing. Opportunities for merger and acquisitions, strategic partnerships would definitely unfold. And wide access to wider capital. This means that it's not only the equity capital, because yes, once the company gets listed, you can raise funds in terms of issuing preferential shares. You can do a rights issue for any further requirement. Subsequently, you can also go for a follow-on public issue. These are generic terms when people or entities get listed. But apart from that, if somebody wants to raise funds in the form of debt also, because they are listed on the capital markets, people know about that company. If the company wants to issue some debentures, this would unfold another door for them for raising funds and repaying them to the investors quickly. So this is how the enterprise would be benefited. It would be a lot of value unlock happening. The liquidity of the shares would be there. You can retain your high caliber employees and protect them from getting poached from your competitors and so on. So there are multiple benefits also accessible to a listed enterprise getting listed. One more thing which many corporates might look probably of those entrepreneurs who have grown 2 or 3 more decades into their business is succession planning. Succession planning is again one of those thirst points which everybody has to start thinking, because new millennials has their own interest into their business. And when a company gets listed, it can be made run through a professional management, and the benefits of the company which has been running for over a period of time can be passed on to the successors, even if they are not interested into that line of business. So those are multiple ways which entrepreneur can think over of getting themselves listed or probably accessing the platform. There are multiple benefits. It would be different from one entrepreneur to the entrepreneur, the way how they look at it. But yes, there are any benefits. There are 236 companies which have already got listed. And if there would have not been any benefits, people would have not flocked to this platform. How people know about this is what we are trying to mention over here. We are having a lot of sessions with the professional bodies, industrial associations. We talk to industrial clusters. Over and above, we also try to engage with governments, industrial associations, and MSME institutes for creating this awareness. Many people don't know about this platform still, and people who may know, they might have their own myths. So we try to create myths and then make people clear so that they take wise decision. Whether they want to get listed or not is again up to them. But yes, we want to make sure that people are there and take wise decisions for their business in terms of fundraising. So this is it. There's a small chart which I may share there of the companies and the growth which it has attained over a period of time from the SME platform. There's an index called index, and then people can look at it as a platform also. So that is it from my side. Few small disclosures because we are also a company which has filed a SEBI for our own IPO. So a small disclosure on that side too. So that is it from my side. I'll be happy to take questions on any side. We are based out of Hyderabad though. Yes, if you have any queries, we'll be able to answer those.
Thank you, Abhishek ji. Thank you so much for such an elaborative presentation. And now I request members to kindly post their questions in the chat box or Q&A box. And we'll take questions, whatever we have in our chat box. So first question is, how does an MSME company access the fund of funds procedurally? Can I request Ravi Kumar sir? I think he's there. Ravi Kumar sir? Yeah, so I think this, how does an MSME company access the funds of funds procedurally? I think that you have already explained in the PPT. Your voice is not coming, sir.
The fund of funds, is it okay now?
Yes, yes, yes.
The central government has initiated this fund of funds last year itself. So they are working on that with other investment funds. So what they do is NABARD and all these funds they are working. So the government will invest in those companies, and those companies in turn will invest in these SMEs. So it is an initiation by the government, and it will take some more time because we are expecting the guidelines soon, very soon. Once the guidelines are released, then we will be in a position to intimate to the entrepreneurs.
Right, sir. Second question is, members have requested to share the presentation, both the presentation with the participants. So can we share the presentations with them?
Yeah, no issue.
Yes, definitely.
Sure. So we will share both the presentation with the contact details of both the speakers. And what is the difference between SME and main board? So if any of the speakers, Abhishek ji or Ravi sir, like to answer.
Sir, would you like to answer this, sir?
No, no
Ravi,
issue.
sir?
You can carry on your NSE side.
So basically the difference between a main board platform and a SME platform is that in SME platform, companies having a paid up capital of less than 10 crores, they can get listed. And companies which are not fulfilling the eligibility requirements of a main board, they can access this platform. Though the eligibility requirement is a barrier, but the benefits which a SME listed enterprise or a main board listed enterprise accesses is one and the same. So there is no difference in what benefit or what value proposition the listed environment would add. The only thing is the eligibility requirement is a bit relaxed on the SME platform, which is in reach of most of the business owners these days. Subsequently, after listed, when you look at the trading platform or probably the IPO application numbers, then a minimum of 1 lakh as a threshold has been put, because when you look at those SMEs, there is a probability of them growing or probably of them not growing so fast when compared to a main board entity where people invest only with an interest of listing gains. So those listing gains may or may not be possible in an SME enterprise. So threshold has been kept at 1 lakh, assuming that if you ask somebody to invest 1 lakh in a company, at least that investor would do a background check of few questions: that why I'm investing, what would be the return, and subsequently which company I'm investing and which promoter I'm banking on my investments. Amount for investor for them to park. Yes, in an SME platform, the general gestation period is not 15 days or 1 month. It is definitely at least one result, that is half year or probably a 1 year, where people can justify and see that whether the company has been doing well in terms of their business or not. So that is how it has been kept, and these are the basic differences when we have to look at a main board or an SME platform.
Okay, thank you. So next question is, as per LODR regulation, 16 to 27 has been exempted for SMEs. So only corporate governance report filing is applicable, and question mark. So I think.
Sir, can you take this, please?
Yeah. See, the corporate governance report is only for the companies which are having paid up capital of more than 10 crores and 20 crores net worth. So whatever company is having that much capital or net worth, they have to adhere to the corporate governance norms. That is the
Right,
thing.
sir. Right, sir. So next question is, how can a company be valued?
It is on the financial performance. Yes, sir, please go ahead, sir.
How can a company be valued?
See, what is the purpose of valuation? First, you have to look into that. What is the purpose? The purpose depends, because if they are going for any premium issue or preferential issue, or if they want to go for acquisition or something else, there are certain models like book value, discounted cash flow, and other methods. So depending upon the requirement, we will value the company. Valuations will be there.
Then members have requested, please share the contact details of speakers. Yes, we will be sharing. Then what? Then there is a question, is there any time limit restriction for the shareholders not being promoters of the company, of private company, who are going for an IPO to sell their shares?
Yes, investors who are there as investors prior to the public issue, there is a norm which was earlier 1 year, which has now been reduced to 6 months, and they can sell their stocks, because once the company gets listed and pre-IPO normal investors who are not forming a category of the promoter group, their shares are locked. After that lock-in period is over, they can sell their shares. Anything to add, sir?
No, that's all. They reduced it from 1 year to 6 months.
Right, sir. Will this recording be available? Yes, we will be sharing the recording link with all the members. One more question is there. What is the difference between BSE and NSE exchange listing for MSME? Do these exchange help connect with lead manager and merchant banker, etc.? What is the approximate cost to an MSME to list? How long does this procedure take?
So Ravi sir, please go ahead, sir.
So the question is too large. The thing is, we have to work out the criteria of listing. Listing means there are two aspects again: underwriting commission, brokerage commission, listing fees, and all these things. So unless we know the issue size, it will be difficult to measure the amount accurately. So if there is any such type of inquiry there, ask him to contact directly so that we can work it out and tell them.
Yeah. So maybe offline they can members can discuss with the Mr. Abhishek or with Ravi sir, and then they can. Yeah. So I think we have done with the almost all the questions, and I request the members, if they have any questions, they can write to IACC AP TS Branch, and we will forward your questions to the speaker, and we'll connect you with them to have more discussion and to have your questions directly asked with them. So now I think we have almost all the session, everything, all questions as answered. So now I take this opportunity to propose vote of thanks. I, on behalf of Indo-American Chamber of Commerce, would like to thank our esteemed speakers for this session, Mr. Ravi Kumar Kaniganti sir and Mr. Abhishek Gaur, for joining us today, sharing their knowledge with our members with such a comprehensive presentations and clarifying all the queries of our members. And I also request our members to write to us for any kind of their queries or their doubts, or if they need any information. And last but not the least, I thank all our participants for attending this informative session. And I'm sure that each one of you will be benefited by the interesting deliberations of this session. Thank you, one and all. Thank you so much. Thank you to Abhishek ji.
Thank you.
Pleasure having you there on this session. Thank you.
Thank you.
Good day, all of you.